Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about what's happening with inflation and interest rates. Now, I'm constantly being hit with messages from people saying, "What are you talking about? Russia is one of the strongest economies in the world. It's doing much better than the USA, the UK, Australia, and all of the West." And that assumption is based on what's happening with GDP. And we see in the press quite frequently that Russia is growing strongly, its GDP figure is forging ahead. And actually, in percentage terms, it is growing faster than the economies I've just mentioned. However, GDP can be a very misleading metric to look at in isolation. You need to look at what's happening with the rest of the economy. And what's happening in Russia right now is that Russia has pivoted and turned itself into what's called a wartime economy. And that basically means that the Kremlin is now sponsoring thousands of companies in Russia to produce things for Ukraine. So those businesses are being given guaranteed orders directly by the state, and on fulfillment of those orders, they get paid. So that means that those companies are now enjoying super profits. They're not having to waste time and money and effort in research and development and coming up with new products and marketing them and hoping that they can sell them. They're just making things, selling them to the state and being paid a healthy profit. So that's driving up GDP. But in terms of where that money is coming from, it's coming from the Russian state. And the Russian state is taking that money from the National Wealth Fund. And the longer that this situation goes on, the worse it's going to be from Russia's point of view, because they're draining their reserves. There isn't any external cash coming into that arrangement. Nobody's actually buying any of this equipment. It's just the state saying to these companies, make it and then we'll use it in Ukraine. And so in order to get a full understanding as to what's happening in the Russian economy right now, we need to look at all of the available metrics. And the ones that we're being provided with by Russia are inflation, interest rates, and what's happening with the Russian ruble. And what we've seen over the course of the last 12 months or so is that inflation has been rising rapidly, which is the opposite of what's been happening around the rest of the world. In 2021 and 2022, we saw a big increase in inflation, firstly as a result of the COVID-19 pandemic, and then secondly as a result in the increase in commodity prices following Russia's invasion of Ukraine. However, in response to that, central banks around the world have been increasing interest rates over the course of the last few years, and those increased interest rates are now starting to result in falling inflation in most economies. And we're actually now starting to see interest rates coming back down. The Fed recently reduced its interest rate by 50 basis points, which is a major drop. But in Russia, we're seeing the opposite. And in fact, the central bank recently surprised the market by increasing interest rates by another 1% to 19%. And if we look back at what's happened over the last few years, immediately following Russia's invasion of Ukraine, the central bank increased interest rates to 20%, and they called 20% at that time an emergency level. So the current rate of 19% is very close to that emergency level. So in today's video, we'll have a look at what's been happening with interest rates. We'll look at the most recent announcement by the Russian central bank and talk about why they've increased rates again to 19%. We'll have a look at what's been happening to interest rates since the invasion of Ukraine and how the current rates compare to the rest of the world. We'll also have a look at what's happening with inflation and producer prices, because they give us a very good indication as to what's likely to happen to inflation and interest rates over the course of the next few months. And then finally today, I'll wrap up with my summary as to what I think is going on in Russia right now and what the implication of this latest increase in interest rates will be for the Russian economy. But before we get started on all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. Really, really mean this. If you're a long-term supporter, either through Patreon, where you can get early access to my videos and watch them advert-free, or YouTube membership or Buy Me a Coffee membership, thank you so much for that long-term support. I've got some supporters who've been supporting me for more than 2 years, and that is amazing. And if you've bought me a coffee or a YouTube super thanks recently, thank you so much for the time and the effort and the generosity involved in that. Really does mean a lot to me. On the 13th of September, the Russian central bank unexpectedly raised its benchmark interest rate by 100 basis points to 19%. saying that inflation remained stubbornly high and action was needed to reduce it. Overall, persistent inflationary pressure remains high and has not yet shown a tendency to decrease, the central bank said in a statement. The latest set of macroeconomic forecasts projects inflation at 7.3% for the full year, well above the central bank's 4% target. Elvira Nabiulina, the head of the Russian central bank, said that the board members had been assessing the need to raise the hike to 20% during the meeting based on the latest data. Russia's government now expects gross domestic product to increase by 3.9% in 2024, up from 2.8% in its April forecast, but still marking a slowdown from growth of 4.6% in the first half of 2024. This slowdown is likely primarily related not to a cooling of domestic demand, but to increasing supply-side constraints and a decrease in external demand, referring to the impact of Western sanctions that have disrupted Russia's trade with its main trading partners. Nabiulina went on to say that the situation with cross-border payments had worsened in recent months. In a draft monetary policy document published last month, the central bank stated it would need to maintain a tight monetary policy for a prolonged period to achieve a sustainable decrease in inflation. Corporate lending growth, another major factor behind high inflation and economic overheating, accelerated to 2.3% in July from 1.5% in June. The latest available data showed despite high interest rates. The next Russian central bank board meeting is scheduled for October the 25th, and some analysts have already suggested that further rate hikes are possible. Nabiulina said figures from next year's draft budget, due to be unveiled soon, would play a role in the discussion. Oleg Kurzman, an analyst from Renaissance Capital, said the decision indicated a clear intention, at least at this moment, to continue raising the rate in October. So the Russian central bank has now raised interest rates on 7 separate occasions over the past 14 months, and this is in contrast to what's happening around the rest of the world. In most economies, we saw inflation peaking following Russia's invasion of Ukraine. It picked up on the momentum that had already been built from the ending of the COVID-19 restrictions, where demand spiked across the world. We then saw an increase in commodity prices, which pushed up prices further. So inflation was driving high. And so to combat those high levels of inflation, most economies introduced interest rate increases. And those interest rate increases have cooled demand because they've made borrowing more expensive, and so individuals and companies have reined back on the amount that they're borrowing. Therefore, the amount of money in circulation has gone down, so has demand, and prices have started to retreat. However, the opposite has been happening in Russia. This chart shows the movement in interest rates in Russia over the past 3 years. What this shows is that immediately following the invasion of Ukraine, the Russian central bank hiked interest rates to what they referred to at that time as an emergency level of 20%. And that emergency level was brought in to try to combat the potential impact of all of the sanctions that were starting to be applied against Russia. Now, that emergency rate of 20% was introduced on February the 28th, 2022. However, by April the 8th, it had been reduced to 17%. It was then reduced to 14% on April the 29th, so only 3 weeks later. It came down to 11% on May the 26th, 9.5% on June the 10th, 8% on July the 22nd, and came down to 7.5% on September the 16th. So within 7 months of the war in Ukraine starting, interest rates in Russia were actually lower than they were before the war started, when they were at 8.5%. And Russia kept interest rates at that level of 7.5% until July the 21st, 2023, when they were increased to 8.5%. They were then increased to 12% on August the 15th, 13% on September the 15th, 2023, 15% on October the 27th, 16% on December the 15th. They were increased to 18% on July the 26th, 2024, and the most recent increase to 19% was introduced on September the 13th. So what we've got now is that the interest rate is sitting at 19%, which is only 1% below the emergency rate that the Russian central bank introduced immediately following the invasion of Ukraine. So basically what we've got in Russia right now is the equivalent of an emergency rate. And when we're talking about emergency rates, that tells us that there's something happening in the Russian economy. There is an emergency going on, and that emergency relates to the fact that the Russian economy is in severe difficulty right now. The GDP figures that Russia constantly is promoting in the press, saying how well the Russian economy is doing, are a mask. These figures actually tell us that there is a fundamental problem. And if we compare the current rate of interest of 19% in Russia with the rest of the G20, the 20 largest economies in the world, you can see that there are only two economies that have higher rates: Turkey, where it's at 50%, and Argentina, where it's at 40%. And if you follow the channel, you'll know that both Turkey and Argentina are in a state of economic crisis right now. These economies are out of control, inflation is off the scale, and so they've had to hike their interest rates. Now, the fact that Russia is sitting third behind those two nations tells you that there are severe problems in the Russian economy right now. And the only other two countries where interest rates are in double digits at the moment are Mexico, where it's at 10.75%, and Brazil, where it's at 10.5%. And as I discussed at the start of today's video, most economies around the world are actually seeing inflation and interest rates starting to come down at the moment. So it's likely that we'll see those rates continuing to go down over the course of the next 3 to 6 months. And this chart compares Russia's interest rate of 19% with every country in the world. And as you can see, Russia currently has the 15th highest interest rate out of all countries. And the rate is actually higher than it is in Pakistan, Gambia, Haiti, Kazakhstan, Mozambique, and Uzbekistan. And that really puts into perspective just how serious the problem in Russia is right now. Now, the main reason why Russia has been increasing its interest rates is to try to tackle what's happening with inflation. And this chart shows the movement in the official rate of inflation in Russia over the past 12 months. And you can see that back in August 2023, inflation was sitting at 5.2%, which was 1.2% above the target rate of 4%. So at that point in time, inflation looked like it was relatively under control. However, despite the fact that Russia was increasing its interest rate at that time, inflation started to increase, and by November it got up to 7.5%. It remained at or around that level until February 2024, when it increased to 7.7%. We then saw an increase in May to 8.3%, to 8.6% in June, and in July, the official rate of inflation was 9.1%, which is more than double the target rate of 4%. Now, as we've just seen from the interest rate chart, in July 24, the interest rate was increased from 16% to 18%. But despite that, inflation in August has remained at 9.1%, and this has now led to the central bank increasing interest rates by a further 100 basis points to 19%. And the persistence of this high rate of inflation is one of the reasons why it's expected that the Russian central bank may increase interest rates further, and they may actually increase it above that emergency level of 20% that was introduced back in February 2022. Now, one of the metrics that I think is really important when we're looking at what's likely to happen over the course of the next 3 to 6 months is what's going on with producer prices, also referred to as factory gate prices, because this tells us how much all of the companies in Russia are selling their goods for, and therefore gives us an indication as to what's likely to happen with prices over the course of the next 3 to 6 months, because as those goods are shipped from the companies to the stores and various other places, then the prices will start to unfold. And this chart shows the movement in producer prices in Russia over the past 12 months. And if we look back at August 2023, you can see that producer prices were increasing by 10.6%. So that was a high level, given the fact that inflation itself was running at 5.2%. So producer prices were almost double the actual rate of inflation. And that gave us an indication at that time that we were likely to see an increase in inflation, because those producer prices, the factory gate prices, would ultimately feed through into the actual rate of inflation. Now you can see that in September, October and November, there was a sharp increase in producer prices. By November 23, they were increasing year on year by 21.9%. And that's one of the factors that's been driving up inflation in Russia, particularly because the sanctions have been preventing the import of various goods. Russia is now more dependent on its own production. And when your own production costs are going up by almost 22%, that is going to feed through into consumer prices and push up inflation. Russian producer prices continue to rise by more than 19% in December 23 and January, February and March 24. The increase reduced to 18.4% in April, 16.2% in May, 14% in June, and the latest figures for July show that producer prices year on year increased by 13.7%, which is 4.6% higher than the official rate of inflation, and tells us that inflation is unlikely to reduce at any point in the near future because these goods will be hitting the shelves in Russia over the course of the next few months, and when we've got a year-on-year increase of almost 14%, that's going to feed through into inflation. So what's the summary and conclusion today? Well, I wanted to post this video because another increase in interest rates in Russia tells us that there are problems in the Russian economy. The Russian central bank have increased interest rates over the past 14 months on 7 separate occasions, from 7.5%, which is already quite a high level. When you look at interest rates in countries like the USA, the UK, Australia and the West, they are considerably less than 7.5%, which is where Russia was this time last year. And in fact, interest rates are going down in most of those economies. But in Russia, they've increased their rates from 7.5% to the current level of 19%. And 19% is only 1% below the emergency level of 20% that Russia introduced immediately following the invasion of Ukraine. So all the people that are sending me messages saying, what are you talking about? The Russian economy is doing fantastically well. There are absolutely no problems whatsoever. Haven't been listening to what the Russian central bank are doing, because they're trying to get control of the economy. They're trying to cool price increases, trying to get that inflation down to the target level of 4%. But every time they increase interest rates, inflation continues to go up. And that represents a serious problem from Russia's point of view. Now, in terms of answering the question as to why inflation keeps going up, I think there are 2 main drivers. The first is that Russia has converted itself into this wartime economy. So as I said right at the start of today's video, the Kremlin is now sponsoring thousands of businesses in Russia to produce things for Ukraine. Those businesses are producing super profits. They're not having to try that hard. They're not having to do sales and marketing, but rather they're just selling things directly to the state. But the problem with that is that those companies are recruiting heavily. They're offering large salaries to people to join them so that they can hit maximum production. The people who are joining those jobs are leaving behind vacancies, and the companies that are now vacant of staff who need to hire more people are having to offer higher salaries to compete with all of those businesses that are being sponsored by the state. So the Kremlin itself is actually fueling a wage spiral by sponsoring these businesses. And that wage spiral is driving up inflation because people are being paid more, they've got more free cash, therefore they're spending more, demand is rising. When demand goes up, it generally pushes up prices. So that's what's happening in terms of the wartime economy. But in addition to that, the sanctions that have been applied against Russia as a result of the invasion of Ukraine are also driving up prices because it's limiting the amount of goods that Russia is able to import. It now has a much smaller pool of countries where it can go to import things. And so that shortage of goods is leading to shortages on the shelves and is driving up prices. So we've got 2 main drivers as to why inflation is going up. And every time the central bank increases interest rates, it isn't really having the desired effect. Inflation is still rising. And this really tells us that there's a fundamental problem in the Russian economy that's going to be very difficult to fix, because simply increasing interest rates, what that will do is increase the cost of borrowing. So any companies or individuals in Russia that need to borrow money will have to pay more for that. But those increased borrowing costs aren't fixing the 2 problems that are being caused by the shortages from the sanctions and the increase in wages. So Russia does have a serious problem right now. And what we saw from the producer prices is that it's likely that inflation is going to continue rising because the producer prices give us a heads up as to what future prices look like in Russia, and those future prices are still rising by more than 10%. So this situation isn't going to be solved anytime soon, and the Russian central bank is likely to have to increase interest rates again. That may take it above that emergency level. And so anybody that thinks there isn't a problem in the Russian economy right now just needs to look at the language that's being used by the Russian central bank. They've increased interest rates to what they previously called an emergency level. That tells us that there's an emergency going on right now in the Russian economy, and until they fix the fundamental problem of driving up wages, which is driving up inflation, it's unlikely that Russia is going to be able to solve the situation. And the longer that this goes on, the more Russia is going to have to dip into its reserves, because it's now funding a lot of its expenditure using the National Wealth Fund, because despite the fact that yields are at 19% on its bonds, it's struggling to be able to raise bonds. And I'll cover that in a future video, so please keep watching. I'll be posting that at some point soon. So the overall summary of today's video is that the Russian central bank have increased interest rates on 7 separate occasions in the last 14 months. The most recent increase was a further 100 basis points to 19%. That means that interest rates in Russia now are some of the highest in the G20 and also some of the highest in the world, and are only 1% below the emergency level that was brought in back in February 2022. And that tells us that there is an emergency going on in the Russian economy right now. So hopefully you've enjoyed today's video. You found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end. And here's something to put a smile on your face.